Dude, this shit gives me fucking chills, man. I just like accidentally hit a key on my keyboard that like opens up this MT4 here, which I'm surprised still works. And I heard that sound that it makes when you run it, and that sound was just like it just blew open a whole wave of nostalgia and like just remembering all these nights that I've been messing with these charts and stuff, and oh my God, and just going over the analysis and stuff. Oh my God, this is crazy. And like I was like, is this actually live? Like, does this actually work? Is it connected? And yeah, it's connected. So I thought, just for the fuck of it, I'm just gonna like look over this shit and mess around with it just for fun, just for a few minutes. I really need to get back into this shit though, because oh my God, like I didn't realize just how much I like it inherently. It's like a whole different type of computer game. But anyway, okay, so it happens to be on Euro pound, Euro and British pound. I did not switch symbols. It's just this is what it landed on. So right now we have the Euro Open, which is the Frankfurt Open. So that means that I believe the London Open will be in just a few minutes. There's going to be, yeah. So at the conclusion of these candles here that have 6 minutes left, the 15, 30, and hourly, that's when the London market is going to open, and that's when the real action is going to start. So as we see here, the day started back here. You see this gap. This is the switchover, the daily switchover. This is when the day actually starts. I'm not 100% sure because this does have to be adjusted a little bit for daylight savings. And I forgot the details because it's not like you have to look at it in terms of like international like Forex standards for like daylight savings for the way these markets run. And some of these markets shift and some don't. Like I forgot, like Tokyo does it differently than London and the United States, but I forgot the details. But let's just pretend that this is correct. It doesn't matter at this point. So yeah. So 3 hours after, okay, I know that during either winter or summer, Tokyo opens 2 hours after the daily switchover, and then during the other one, it opens 3 hours. So this might be correct, it might not be. It might have to be back here on the second hour. Okay, so what do we have here that's interesting? Okay, so here we just got like things are kind of moving up here, and then there's just this massive swing down, and then a massive swing up, and then it kind of gets hammered down into the middle again. Okay. Now for me, this is relatively irrelevant because once you're getting into the Euro Open territory, or I shouldn't call it, well, maybe I should, into the Frankfurt Open territory 1 hour before London, that's usually when I don't like to initiate any trades. I think things are too chaotic between like it can still be done if the signal's clean enough, but it just carries more risk because there's a lot of fucking around before London opens, and then when London opens, there could also be fucking around. But I would rather pop open a trade after as London opens or after London opens than between when Frankfurt opens and London opens, that hour gap. Um, and usually, like before this Euro Open here, I would say just to step away, maybe. But again, if there's a strong enough signal, you could still do it. But I feel like in this area, you need much better quality setups, and you really don't want to be messing around. Like you want to have tighter criteria. I haven't formalized exactly the parameters of that yet, and I'm not in a stage where I'm working on that. But yeah. So okay. So the question is, could this be predicted? But again, it doesn't matter because this is during a time I'd not be interested in taking trades. Like I would probably set a filter that would, by default, like for automated trading by default. Okay, so 1, 2, 1, 2, 3, 4, 5. Okay, this is the 5-hour Asian range. Tokyo open to 5 hours later. Um, yeah, that's the 5-hour Asian range. And for some reason, I'm seeing an extra blue line here. Okay, I'm confused. Whatever, doesn't matter. But yeah, the range is from here to here. So that's an important range. And what we see is that, you know, things are dipping back and coming up, looking decently positive and it breaks out of the Asian range for like almost no pips at all. Now, here's the thing. I'm not sure what the volatility levels have been lately. Euro GBP has classically been a very flat symbol. It doesn't really move much. Let's see, where's the daily range? Oh, ADR today. Yeah, ADR is 28.6. That's very, very small. So a movement of zero point 0.8 pips is going to be 2.8% of that range. So yeah, that's nothing. So yeah, like if I played this breakout, for example, and I'm not saying I would, but if I did, um, and it's not so much breakouts tech I look for exactly, but breakouts have a tendency to coincide with the signals I look for, but they can come earlier, they can come later. Um, that would not be enough to take any profit before it melted and caused a stop out. I'm not saying that's anything I would be interested in. In fact, I absolutely would not be interested in this because as you're coming up here, you can see the 30-minute stochastic it's recovering, but it's just looking really flat. It already peaked back here. Wait. Yeah, so it's here it's already going down, then it's like slightly recovering. And as we can see here at the breakout time, it closes up. Okay, it closes here. That's a very weak recovery, especially as you see the 5-period stochastic here, which is the dashed line. That's like not recovering either. At the very least, it would need to be leading upwards. It would need to be making a new high upwards and at least leading the 11-period stochastic, but it's not. It's actually leading it to the downside. So that's not a good sign. Um, now, as you can see, like these stochastics are all very positive, and I have a 200-period stochastic on all of them as well, which is super positive. Um, but they just don't have any short-term momentum. So now the 15-minute here had good momentum, but the 30-minute was just garbage. 4 hours making a recovery, a pretty decent recovery, but that's coming from a high over here, so it might be flat for a while, who knows. Um, just looking at the 5-minute chart, the RSI histo is very strong, bust, pullback, break and close, without much follow through. But let's see how much follow through there was. It was a little more follow through, so it was like 5%, might be enough to take profit. Again, I'm not saying that's a setup. I'm just saying in terms of range, 5% ADR. And then of course you also have spread, right? Which spread itself is like toxic here. The spread itself is, 2 pips, and 2 pips. I mean, that's almost 10%, right? Well, no, it's like 7%. 7% spread is toxic. I would not trade that at all under any circumstances. Now, if that was 2 pips spread on something that was moving, you know, 90 pips a day, that would be different. But, no, this is a toxic spread. Now, again, this is only looking at it from this data source. Different servers, different trading platforms will have access to different liquidity and will have different spreads. So in some cases, this spread might be like virtually non-existent. It might be like 0.2 pips or something. And then you might have a commission, which could be like maybe like zero point 0.4 pips one way. So that's zero point 0.8 pips total. So you have to add that. Spread and commission is basically the same thing. It's just measured in pips. Okay, so anyway, so coming up to here, obviously I would never play this because it's just looking too weak. Now on the hourly was looking better because this tumble only happened after it did this shit. Um, but yeah, like the RSI histo here was making a recovery, and actually, if you did play the bust pullback break and close, if you really were strictly doing that, this is your bust, right? This is your pullback. This is your break and close right here, right here. And from there, actually, if you waited for the next candle, okay, you get 1.6 pips. So that's still pretty trash, right? But again, like it's a weak, this is weakness, relative weakness following relative power here. And also, so yeah, like there, you do get a TMA here, TMA slope, green indication here. Um, now, yeah, so there is that. But again, it's like very initial, and this is a very small indication following a much larger move. Okay, that's one thing. So these are just different things I'm looking at for fun. Now, looking at the 4-hour chart, we can see that there's a massive, massive uptrend. Like just massive. I mean, this has been going up and up steadily again and again and again. Now, it's not super strong because it oscillates very heavily, but it's well, I shouldn't it is strong. It is strong. It starts off a little weaker here, and you get a gradual loss of momentum. And then once you go over here, you get more of a takeoff over here. But either way, it's been staying over the 20 EMA. It's been staying over the 34 EMA cloud. It's a perfect upward trend, and there's nothing to indicate that it's over yet. But again, a 4-hour trend like that is just very long term relative to what I'm looking to do. The hourly here coming up to this area this time was looking kind of stagnant, and it's nestling into the 34 EMA wave, and perhaps there will be support there. Because here it found support at the bottom of the wave, and for it to be more bullish, it would need to find support more toward the top or middle of the wave. Okay, whatever. So, and then over here, leading up, like we can see after this huge surge up here at the end of the day, technically it hasn't even recovered that. And if you look at the pattern of the candles on the 30-minute chart, you can see that it doesn't actually look very bullish. It looks kind of stagnant. It doesn't have that classical feeling of upward pressure where it's more like a cup and handle type of thing. If anything, it almost feels like it's being held down. but not in any definitive way. So it's not really definitive in either direction. It's just stagnant, even if it is pushing up. So in those situations, you have a bit of equilibrium in terms of momentum in both directions. And when you have equilibrium, that's when you usually have the greatest chance for sudden drops or sudden surges, especially if they're against the trend. And they can go back and forth. This is a market maker's dream situation because they can play both sides and collect as much spread as they can without being forced to deal with a unrelenting trend. This is where the market makers, I would assume, make the most money. So it's just being batted. Okay, so London opened. I wasn't even paying attention. So of course London banged it back down at the open. It's just continuing. It's basically liquidity harvesting. It's spread harvesting because there's this equilibrium. What's happening is that it's very easy for the price to get batted in this range, batted back and forth, and so if you're a buyer, you're going to expect it to come down. And if you're a seller, you're probably going to expect a good chance that it could come up. Uh, but again, that's not the way I play things. But for me personally, based on these stochastics, there is just no good signal at all. Nothing. They're telling different stories, and that leads to unpredictable direction, and it leads to the a very high potential for erratic and large movements in price in both directions, which might be predictable in some ways in terms of containment, but that's a different trading style. And usually that's the type of trading style that is lower probability but higher risk reward. So you get better risk reward but lower probability. And you might play it a bit tighter or you might accumulate positions at the extreme ends and play it tighter and tighter as your position gets larger, which is the exact opposite of what I would be interested in. So this trend break indicator is showing up on the 15-minute and hourly chart, showing targets to the downside. I don't know what the target is on the 15-minute. It's not drawing it for some reason. But on the hourly, there's a target. There are two. Okay, so it's changing the targets. The candle didn't close, so those targets will only remain quote unquote valid if it closes. But again, this is just an indicator. It's not really part of the system that I've been working on. But if this trend break holds for this candle, which would require 50 more minutes to figure out for it to close, you got targets at the bottom of the 34 EMA wave, which is a very reasonable target. I think there's one actually in the middle of the wave, and then there's one. Actually, I don't know if that's a target. That might actually be the RSI histo or a 3CR. Sorry. Yeah, that's more of a 3CR thing. So the targets are down here. Those are reasonable targets. So it's interesting to see like this different indicator converging with the structure of other indicators that operate independently of it and have nothing to do with each other. That doesn't mean it's a sure thing, but it's more about probabilities. Yeah, so not too surprising. the price has been hovering in this support zone for a while. Likely there's going to be plenty of action going on around there, whichever direction it ends up going. But yeah, I'm going to leave it at that. Nothing that happened here today is relevant for my system. My system says that everything happening here is not interesting to me. Whoops, wrong button.